The High Stakes Pivot, a comprehensive guide to New Era Energy and Digital, NUAI. As of January 2026, New Era Energy and Digital, ticker NUAI, stands as one of the most volatile and debated transformation stories in the small-cap market. Originally a conventional oil, gas, and helium explorer, the company has undergone a radical rebranding and strategic pivot into the high-demand world of AI data center infrastructure. For an investor in early 2026, NUAI is a high beta bet on the intersection of energy and artificial intelligence. The company is attempting to leverage its land and energy assets in the Permian Basin to build a massive AI campus. However, with a surging stock price comes intense scrutiny, including scathing short seller reports and multiple class action investigations. This guide explores the Texas Critical Data Centers (TCDC) project, the company's pick-and-shovel business model, and the critical risks that could determine if this is a revolutionary infrastructure play or a speculative bubble. 1. The business model: from old energy to digital power. The core thesis of NUAI in 2026 is that the bottleneck for artificial intelligence is no longer just chips, it is power and space. The strategy: powered shells and turnkey solutions. Instead of just selling natural gas, NUAI is positioning itself as a developer of next-generation digital infrastructure. Vertical integration: the company controls over 137,000 acres in New Mexico and Texas. They use their own energy resources to provide behind-the-meter power, generation that happens on-site rather than pulling from the public grid, to data centers. Powered shells: NUAI builds the physical buildings, shells, and secures the massive electricity hookups, power, required for AI training. They then lease these facilities to hyperscalers, like Google or Microsoft, or neoclouds that bring in their own GPU servers. The pick-and-shovel pivot: in late 2025, CEO E. Will Gray II officially shifted the company's focus away from operating its own cloud servers to becoming a developer for others. This is a landlord model for the AI era. 2. The 2026 catalyst: the Texas Critical Data Centers (TCDC). The primary value driver for NUAI is the Texas Critical Data Centers (TCDC) project in Ector County, Texas, near Odessa. As of January 2026, this project has reached several massive milestones. The 1 gigawatt goal: full ownership. In January 2026, NUAI closed a $70 million acquisition to buy out its partner Sharon AI, giving NUAI 100% control of the TCDC project. Institutional partnership: on January 16, 2026, NUAI announced a landmark partnership with Primary Digital Infrastructure. This partner brings deep expertise in managing multi-billion-dollar data center portfolios and is tasked with securing an anchor tenant, a major tech giant, for the first phase of the campus. Financing momentum: the campus has reported secured more than $11.6 billion in combined debt and equity financing commitments, underscoring the scale of the ambition. If successful, this would be one of the largest AI-focused data center developments in the United States. 3. The bull case: why investors are buying the surge. In the first weeks of January 2026, NUAI stock saw a significant price surge, hitting new 52-week highs near $8.9. The positives: high demand for power. As the U.S. electrical grid becomes increasingly strained, NUAI's ability to provide independent on-site natural gas power is a massive competitive advantage for AI companies that cannot wait 5+ years for a standard grid connection. Strategic location: the Permian Basin is the heart of U.S. energy production. By building data centers where the gas is produced, NUAI minimizes energy transmission costs. Rapid development: engineering for Phase 1 is complete, and site clearing is currently underway. The company expects to reach a final investment decision, FID, by the end of Q1 2026, which would mark the transition from a planning company to a revenue-generating company. 4. The bear case: fraud allegations and financial fragility. While the growth story is compelling, NUAI is currently besieged by legal and reputational challenges that every investor must weigh. The serial penny stock allegations. Fuzzy Panda short report: in December 2025, a scathing report from Fuzzy Panda Research alleged that NUAI spent 2.5 times more on stock promotions than on its actual energy operations. The report characterized the CEO as a serial penny stock runner and claimed the AI pivot was a tactical rebrand to pump the stock price. New Mexico lawsuit: in late 2025, the state of New Mexico sued the company and its CEO, alleging a fraudulent oil and gas scheme involving the abandonment of environmental cleanup obligations for hundreds of wells. Class action investigations: as of January 22, 2026, law firms including Rosen, Pomerantz, and Bronstein, Gerwitz, and Grossman have launched investigations or filed class action suits on behalf of investors, alleging that the company issued misleading business information. Financial red flags: low revenue. Despite a market cap nearing $300 million, the company reported trailing revenue of less than $1 million. This means the current stock price is based entirely on future projections, not current earnings. Negative earnings: the company continues to lose money. EBITDA of negative $15.95 million, and its debt-to-equity ratio is high, 28.8x. 5. Investment strategy. How to approach NUAI. The moonshot allocation. NUAI is not a widows and orphans stock. It belongs in the speculative portion of a portfolio. Because of the fraud allegations and high volatility, many investors treat it as a binary play. Either the Texas campus becomes a multi-billion-dollar reality, or the company collapses under the weight of its lawsuits. Watch the anchor tenant. The single most important piece of news to watch for in 2026 is the announcement of a hyperscale tenant, like Microsoft, Amazon, or Meta. If a major tech company signs a long-term lease, it would largely de-risk the project and silence many of the critics. Volatility warning. This stock has a beta of 2.65, meaning it moves much more violently than the overall market. It is common to see 20% swings in a single day, based on press releases or legal filings. Conclusion. A high wire act in the Permian Basin. New Era Energy and Digital, NUAI, in 2026 represents the ultimate high-risk, high-reward frontier of the AI boom. It is a company attempting to solve the world's most pressing tech problem, the need for power, while fighting off a wave of legal challenges and a legacy of penny stock skepticism. The verdict. If you believe the CEO can successfully execute the 1 gigawatt Texas campus and secure institutional backing, the current valuation may actually be cheap compared to the future cash flows of a massive data center. However, if the lawsuits in New Mexico prove to be a fatal blow to the company's credibility, the stock could return to its penny stock roots. Proceed with extreme caution and never invest more than you can afford to lose.